Welcome back to U.S. Farm Report. Our roundtables this weekend with Darren Fry and Jim McCormick. And now that we're past the October WASDE, let's talk about some of the things that are going to influence price. Obviously, we're all watching South American weather, especially the Brazilian weather, because it's been dry, but we could see a shift, Darren. And if we do, how much price risk is there to the downside in beans?
Well, I think there's a lot of risk if South America goes ahead and produces a lot of beans. We know Argentina's grown a few more, and they've switched some corn acres over after all the leafhopper problems they had last year. So there's going to be more bean acres down there. We also know La Nina has an impact on southern Brazil and Argentina in a year like this, much like 17, and we could see problems down there with production in the southern part of Brazil and Argentina. But without those problems, we're going to have a large crop, and it's really going to weigh on prices. And I think what Jim said earlier, definitely in the low 9s, even high 8s, that's definite possibility. The one caveat to all this is war. You know, war sometimes can bring prices higher, can dislodge supplies. And we could see war escalation, not just in Russia and Ukraine, but also with Israel and several counterparts over there as things have heated up recently. And so that could change the game to more of an inflationary cycle for our grains if we did see things escalate. But outside of that, I think prices will head lower as that South American crop gets confirmed.
Yeah, do you agree with that, Jim? Especially when we start looking at some people saying maybe it's a little too early to be trading South American weather yet.
I think you got to look at it, Michelle. I think it's not too early because, look what the bean market rallied. It rallied over $1 here recently, and a lot of that rally was driven by two things. It was, A, the funds getting out of position of this massive short that they were carrying, and that has to do with more economics. So I think they were trying to jump out due to the Fed cutting interest rates a 0.5 point. So instead of the Fed, essentially when the Fed's fighting interest, the higher, inflation, they wanted to be short commodities. Now they're kind of changing their tune. They want to be flat to maybe even long. But a lot of it also, Michelle, was the hype about the hot, dry September it was in Brazil. So I think we put some weather premium in. That's what the rally is. So now what we're going to do is slowly bleed it out over the next couple months. And like Darren said, the more the market gets confirmation that crop's there, I think you're going to see the sales move away from the U.S. and see more and more China purchases from Brazil. And I think that will turn the market sour. And I do fear there's the potential that we could even see more bean cancellations from China like they tend to do if they get confidence that the Brazil crop's there.
So Darren, we have had a big rally off of the August lows in both corn and soybeans here as funds covered their record short position. Are they flat right now? Do they have a reason to go long in this market, or what's their next move?
Well, I think they probably will try to get flat. I don't know if they're completely flat yet. I don't think they were as of last week, but they're closer. But I doubt there's any reason to go long unless we see something with war or something with better demand than what we're seeing now, or a crop problem in South America. Aside from those things, I don't see why the funds would get long. In fact, if anything, I think they add back to their short position as we go through winter and try to push this market lower as we come into spring and a big South American harvest.
Yeah. So the wheat market has had a good rally as well, putting in war and weather premium. Jim, is it possible that if wheat continues to move higher, if we get those geopolitical concerns Darren talked about, that wheat could help pull corn and soybeans higher or not?
I think if it does that, Michelle, it's got to be something very severe, like a real big escalation, maybe what's going on in the Ukraine, something like that. In general, I think the wheat's going to try to be the most positive market out there. But I think it's going to be very hard for it to move up because I do think it's going to struggle. If the beans break, I think they will pull the corn down on the ratios of the corn to bean ratio. And those two are going to pull the wheat down, I fear, more than anything else.
All right. Well, thanks so much for joining us. Jim McCormick with agmarket.net and Darren Fry with Water Street Solutions. We will have more U.S. Farm Report coming up.